Hey guys, this is Andre, hope you're all doing well. In this video, I'll talk about the Brazilian stock option market. Please take a minute to read our disclaimer, and if you agree with all the terms and conditions, let's go. We'll start by explaining how the option ticker symbol is constructed. Then we'll talk about the lot size and how many shares we can buy with each option. We'll talk about the expiration week dynamics, trading costs and taxes, and finally margin requirements for option writing. Usually the stock option ticker symbol in the Brazilian stock market has 7 to 8 digits. The first 4 digits are related to the underlying stock. This is the same combination the companies use to sell their stock in the stock market. The fifth letter is related to the option type, whether it's a put or a call, and also its expiration month, while the last 2 to 3 digits are related to the option strike price. And now we'll see each of these parts in a little more detail. So if you go to this website, you can get a list of all the companies that have options listed in the Brazilian stock market. But some of the companies you find there have only issued their options to their employees, such as in bonuses, and therefore many of these companies' options are not openly traded. So you can also check this list of companies whose options are openly traded in the market. And this list is up to date on October 2018. As we can see, the first 4 digits here in each of these codes are related to the company name, and the last number refers to the stock type. If it's number 3, then it's a common stock. If it's number 4, then it's a preferred stock. And if it's number 11, it's an unit, which is a combination in a certain ratio between preferred and common stock. These are the companies responsible for the majority of the volume traded in a given trading day. You can say that these are the most popular stock in the Brazilian stock market. And these are the companies whose options are openly traded in the market. Now coming back to the option ticker symbol, the 5th digit is with respect to the option type and expiration month. So if we have a letter from A to L, it means that this option is a call. If we have a letter from M to X, it means the option is a put. And each letter means a certain expiration month. For example, if your option has a letter B, it means that it's a call that expires in February. Or if your option has a letter S, it means it's a put that expires on July, and so on. Now, the final digits of the option ticker symbol are related to the underlying strike price, but keep in mind that it's not 100% accurate due to price adjustments to the underlying stock strike price, due, for example, to splits and dividend payments. And in fact, these final digits are usually misleading and has nothing to do with the strike price at all. So I recommend you check the complete option description before you purchase it, believing it's one or another strike price. Now that we know all the different parts that make up the ticker symbol, we can see some examples. The first one, ABEV. K78. The first 4 digits are related to the underlying stock, so it's ABAV3, which are common stocks of the company Ambev. The 5th digit, K. If we recall that expiration month table, we can see that K means it's a call option that expires on November. And the final digit, 78, has to do with this underlying strike price. But actually, if you check the information of this option, you see that the strike price is for 18.26 Brazilian real, which has nothing to do with 78. Make sure to check the complete information of your option. Now next example, PETRV224. The first 4 digits are related to the underlying stock, PETR4. In this case, these are Petrobras preferred stocks. The next digit is related to the expiration month and type of option. So if we check the table again, V means that this option is a put and it expires on October. Now 224 has to do with the underlying strike price. In this case, the strike price of this particular option is 22.42 Brazilian real. So in this case, the final digits actually have something to do with the strike price. But this is not a rule, it's more likely the exception. So always make sure to check the complete information of your option. Now the lot size. Here in the Brazilian stock market, option orders are always a multiple of 100. And each option gives you the right to buy or sell one share of the underlying stock. So 100 options equals 100 shares. And when we see the option price or the stock price, it's always the unitary price. So we have to multiply that by 100 to get the minimum amount we have to pay if we want to enter an order for that option or that stock. In Brazil, we also have the fractionary market for some stock. So it is possible to buy some stocks under 100 shares, but when we are dealing with options, the orders are always a multiple of 100. Now, how does option expiration works here in Brazil? So our stock options always expire on the third Monday of each month, unless this particular date is a holiday, in which case the expiration will be postponed to the following business day. Stockbrokers take and execute option trading orders until the previous trading day of the expiration. So if you want to close your option position before you expire and you exercise or get exercised, you have to do it on the Friday prior to the third Monday of each month. This is your deadline to enter and execute option orders related to the expiring option. And on the expiration date, usually in the money options are exercised automatically, but keep in mind that every broker has different rules. Always talk to their customer support and get to know their rules so you are not taken by surprise later. Now, the costs involved in trading options. Different brokers will have different fees, sometimes based on the volume of each trade you make, sometimes independent of volume. Always check how much you have to pay for a trade so you can take it into account when you calculate whether your option strategy will be profitable or not. There are also Bovespa fees. These fees are collected by the stock market institution itself. Those are calculated based on the volume of each trade. And keep in mind that day trades and swing trades have slightly different fees. Now, when it comes to taxes, here in Brazil, day trades and swing trades are taxed differently. So day trades are taxed at 20% of the profit, whereas swing trades, which are trades that are opened in one day and closed on a different date, no matter how much time it passes, are taxed at 100% of the profit. So it doesn't matter if you have your position open for 1 day or 50 years, you have to pay 50% of the profit. Federal taxes related to capital gains in the stock market here in Brazil are paid monthly, and it's your solely responsibility to pay them. You have to go to the Brazilian IRS website, fill the information of your trades and your profits, and then you get this receipt of how much you have to pay to them by the end of the month. Keep in mind that there is no exemption for swing trades in options. So if you are trading stock and in one given month you sell less than 20,000 Brazilian reais, you are exempt in that month of paying federal taxes. This exemption does not apply for selling options. So no matter how much you sell, you still have to pay federal taxes. And after summing up all your trades, if your month ends up in a loss, you can carry on this loss to offset the next month's profits and pay less federal taxes. Keep in mind that the costs incurred in exercise option and thus buying or selling the underlying stock vary widely from broker to broker. Make sure you know exactly how much you have to pay to exercise your options, so you can be sure that your option strategy makes sense. Now, margin requirements. If you want to write options, you need margin. Margin is some amount of cash or other securities such as stock or treasury bonds that must be deposited into your broker account as collateral. This margin is the broker safety that you will be able to deliver if you are exercised in your options. The amount of margin required for each short position varies with overall market volatility, the volatility of the underlying asset and its price, and the size of your order. And also different brokers employ different margin requirements. And this was a brief introduction of the Brazilian stock option market. If you want to try your favorite option strategy, don't forget to check carefully the option description and also how your broker works, its rules, its fees, and its margin requirements. Thank you very much for watching and see you soon.